esteemed viewers, and welcome to another episode of ATN Business on Atlantic Television Network right here in the great city of Port Harcourt. And this is the network's medium of bringing the happenings in the economy sector of our society to your listening viewers. And this program is aimed at bringing to the doorstep of the viewers the business, financial and economic activities from all strata of society. Its delivery is accentuated through the various stock exchanges across the world, news about government's economic activities, private sector business activities, and laced with expert opinions, stakeholders analysis, and correspondent reports. You're welcome to ATN Business. But before today's bulletin, we have to present the headlines. Stocks. Popola elected as chairman of the Central Securities Clearance System. And judiciary. Court detains Binance executive in prison. On finance, analysts project banks may incentivize their stakeholders and shareholders. And international stocks, markets remain focused on U.S. inflation. Let's go for this very short break, and when we return, we'll reel out the details. Stay tuned, please.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on-spot news, live analysis, expert discussions on trending stories in politics, business, socio-economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today. Only on ATN.
You're welcome back, and now let's go into the details for today. Nigeria Stock Exchange market, which enjoyed a strong first quarter with returns exceeding 39%, is expected to face headwinds in the second quarter of 2024. Analysts anticipate a slowdown driven by three factors: rising fixed economy income yields and CBN rate hikes, a decline in dividends payouts compared to quarter one, the first quarter of the year, and the potential dilution of banking stocks due to the recently announced recapitalization exercise. Bolahon Ologunro, portfolio manager of the FBN Quest, said that the bullish momentum that dominated the local bourse in the first quarter is expected to slow down substantially in the second quarter, And this will be driven by the trioka of impact of elevated fixed income yields, fading impact of corporate actions, and attendant impact of the ongoing recapitalization exercise in the banking sector, he said. At the end of the first quarter in 2024, the Nigerian Stock Exchange gave returns of 39.47% despite a double rate hike by the Central Bank of Nigeria. However, at the end of the first trading week in the second quarter, the equities market saw bearish sentiments going down, which continued on Monday with the market decreasing by 0.38% or 222 billion naira at the close of trading, pushing lower at the market's return year-to-year to 37.81%. The Monetary Policy Committee, MPC, last month raised the monetary policy rate to 24.75%, representing a 200 basis points increase. The Treasury bill environment witnessed elevated yields with average stop rates of 20% at the last 5 auctions, with the current effective yield on the first-year instrument coasting around 26.8%. Issuances have been concentrated at the short end, that's Treasury bills, which has housed 69.0% of total government's domestic capital market borrowings in 2024. Ologunro said that the elevated fixed income yields will likely engender investors to switch funds from the equities market to take advantage of the higher returns on government instruments given rising inflation pressures amidst the absence of corporate actions to catalyze buying sentiments. He said in the second quarter, companies will be declaring fewer dividends compared to the first quarter of over 85%. According to Afri Invest Berger, Stanbic IBTC, Dangote Cement, Transcorp, CWG, Unilever, Okomu, NACO, MC Nichols PLC, and Transnationwide Express PLC will be declaring dividends this week. In addition, the impending dilutive impact of the recapitalization exercise in the banking sector will make investors exhibit cold feet towards banking stocks. Wow, cold feet towards banking stocks. Take note of that, because with the recapitalization of the banks, people will be so cautious before going into any bank dividends, and everything concerning banking right now has to wait until the recapitalization of the banks has succeeded. Maybe there might be mergers, maybe there might be recapitalization, maybe there might be buyovers. We have to wait and see. Continuing, equities capital raise required by the banks has negative connotations for dividend declarations in the near to medium term, he said. Last month, the Central Bank of Nigeria announced a 10-fold jump in minimum capital requirements for banks nearly 2 decades since the last exercise. The minimum capital requirement was jacked up to 500 billion naira for those with international authorization, 200 billion naira for commercial banks with national authorization, and 50 billion naira for those with regional authorization. Access Bank PLC, the biggest bank by assets, wow, which also has vast international openings, needs to raise 500 million naira within the next 2 years. Currently, it has 251.81 billion naira in share capital premium, leaving 248.19 million naira to be raised to meet CBN's regulation. Wow. Another source, a Lagos-based stock market analyst, also expects the market to remain bearish. It's going to go down. Bearing any corporate news, I think the market will remain bearish given the attractive yields in the fixed income market. Investors will flock there. He mentioned that the second quarter will be a bit challenging because banks are very exciting place that investors look at. However, the regulatory directory on banks has been very strict recently and might affect investor sentiments towards it. Just like what I said, it's going to be bearish. So everybody wants to wait to see what happens after the market capitalization of the various banks. Can they meet up 500 billion naira? Can they meet up the 200 billion naira prescribed by the CBN for recapitalization. Let's move on. Market sentiments towards banks will be poor, he said. Boboye mentioned that most banks have begun to release their full-year reports, and despite having good returns, low dividend payouts might defer investors from them. Market played towards dividends and was expecting higher dividends than was declared by the banks because the prices of bank stocks were higher but dividend yields were lower. I'm skeptical that there will be mixed feelings towards them, but maybe when their Q1, that's first quarter, number comes out, it may spur a bit of excitement, he said. He said that the consumer goods and sector has been struggling for a while, but the foreign exchange instability, high interest rate environment, but we'll be seeing restructuring like Cadbury. We've seen a lot of them doing debt restructuring in the FMCG. So looking at these companies, excluding their foreign exchange losses, can give an insight on what the future for them might look like, which might spur some excitement in that space, Boboye said. Wow, that's some grim look at the banking sector in Nigeria and their stock pricing, and what will be the what will be the investor mood. Investors will have cold feet until the banks recapitalize. Moving on, the group managing director and chief executive officer of Nigerian Exchange Group, Mr. Temi Popuola, has been elected chairman of the Central Securities Clearing Systems PLC, effective from April the 1st, 2024. He will be succeeding Oscar Oyema, who retired after 13 years as chairman. Wow, that was a long stretch. A statement from the NGX Group on Monday said that Popola will be bringing a wealth of experience and expertise to his new role as a seasoned financial expert with a track record of notable achievements in global market growth and operational insight. The NGX Group, GMD, previously served as the CEO of Nigerian Exchange Limited, guiding the exchange through several strategic milestones. Commenting on his new appointment, Popola noted, "As I step into the role as chairman of the CSCS, I'm honored and humbled by the opportunity to guide this esteemed organization to new heights of success and impact with the steadfast dedication to our mission, and by building on the very strong foundation that has been laid, I am committed to working with my colleagues on the board, management, and staff to drive growth, foster innovation, and uphold the highest standards of integrity and excellence. Collaborating with all our stakeholders, I am confident that we will chart a course towards continued excellence, delivering value to our clients, stakeholders, shareholders, and the broader financial community." Joining Popola on the board are the chairman of the Association of Securities Dealing Houses of Nigeria, Samuel Onukwe, and VFD Group CEO Nonso Okpala. Their addition to the board is expected to further enrich the quality and the collegiate decision-making process at this level of leadership of the company. The NGX Group stated, the NGX Group statement partly read, "The CEO of Central Securities Clearance Systems, CSCS PLC, Mr. Haruna Jallo Waziri, welcomed new members of the firm's board. We are confident that their addition to the board will further enrich the quality and the collegiate decision-making process at this level of leadership of the company," he stated. Jallo Waziri extended sincere gratitude to Ms. Tinuade Awe, Mr. Sheyi Owotuo, and Mrs. Tairat Tijani, who also retired from the board, along with Mr. Oyema, for their outstanding service to CSCS. Moving on to other stories, some analysts are projecting that banks may incentivize their shareholders with jumbo dividend payouts ahead of the capital raising endeavors to meet the new requirements of the Central Bank of Nigeria. As stipulated in March, Nigeria's Apex Bank issued a circular announcing the review of the capital requirements for the operations of commercial merchant and non-interest banks and promoters of new banks in the country. In a statement signed by its acting director of corporate communications, Sidi Ali, the CBN said that it had become necessary to raise the capital base of the nation's banks due to both domestic and global shocks. Thus, the CBN directed commercial banks with international authorization to increase their capital base to 500 billion naira and national banks to 200 billion naira, while those with regional authorization were expected to achieve a 50 billion naira capital floor. Non-interest banks with national and regional authorizations were required to raise their capital to 20 billion naira and 10 billion naira respectively, speaking on ways that the banks may be looking to raise required funds for the acquired and approved time frame expiring March the 31st, 2026. The former president of the Chartered Institute of Bankers of Nigeria, Okechukwu Onwebu, opined that the lenders may be looking to empower minority investors. He said that the CBN is asking the banks to recapitalize and telling them that retained earnings that are on the books of the banks will not be regarded as part of the capital. And if that is the case, the best that the banks can do is to use their retained earnings to pay jumbo dividends to their shareholders, so that those shareholders can use that money and move and more of theirs to buy more of the shares of the bank. Onwebu further stated that while the CBN might want more foreign inflows of capital due to foreign exchange considerations, bank owners will be concerned about losing control of foreign interests. Most foreigners, if they want to invest, may want to have a controlling interest in the banks, and that is something the bank owners may not want to allow. For that reason, most of the banks will want to be careful of the controlling interest of the foreign investors, and if the interest is too high, they will probably not want to go that route. In addition, the central bank should allow these banks to use their retained earnings and issue bonds and other forms of capital raising, he elucidated. According to the CBN, only the share capital and the share premium items on the shareholder fund portion of the balance sheet will be recognized in this particular round of recapitalization. To meet the requirements, the CBN gave the sector 3 options, including issuance of new common shares by way of public offer, definitely, rights issues and private placements, mergers and acquisitions, and the upgrade or downgrade of their respective license categorization or authorization posted there. That is to say, if those that cannot meet up the 500 billion naira recapitalization can go for the 200 billion naira recapitalization. So it's either a downgrade or an upgrade. Let's go on. Echoing similar sentiments, an economy and capital market analyst, Rotimi Fakayejo, said that the CBN has said 2026 is the date for the recapitalization. So there is still a way to go. A lot of things can still happen. They are talking about shareholders' funds not being part of the capital. But what we are expecting now, at least for the banks that have not yet announced, is for them to pay out as much dividend as possible. That way, shareholders will be empowered to buy more shares through the right issues. It might not be within one financial year, but the more important thing is that the government expects them to get more foreign capital than local. For a bank like Zenith Bank that has a share issue of 31 billion units with a share price of 40 naira per unit, that means they would need to do about 8 to 5 billion additional shares to raise that quantum of funds. So their shareholding will be diluted, and if the shareholders do not have the money to buy it, it is going to be a loss to them. I think they are going to find every means possible to mitigate against that. So we expect that there should be more jumbo dividend payments from the banks. The Access Corporation has declared 1.1 naira 80 kobo, and UBA should be able to do something like 2 naira 50 kobo. GT Co and Zenith Bank should do as much as 4 naira, so shareholders can have something to hold on to and use that to get more shares. Wow, that's a very good strategy. Talking about GTCO, Guaranty Trust Holding Company, PLC, has announced a 609.3 billion naira profit before tax. Wow. For the 2023 financial year, according to its audited, consolidated, separate financial statements filed with the Nigerian Exchange Group and London Stock Exchange on Monday, the PBT increased by 184.5% from 214.2 billion naira reported in the previous year. I'm calling so much billions, my head is beginning to ache. GTCO is one of the top financial holding companies in the country with a market capitalization worth over 1 trillion naira. I've called a trillion. 1 trillion naira on the NGX. During this period under review, the group's post-tax profits rose by 218.99% to 539.65 billion naira from 169.17 billion naira in 2022. Its loans and advances improved by 31.5% to 2.48 trillion naira, while deposits grew by 63.7% to 7.55 trillion naira. The group's total assets and shareholders' funds closed at 9.7 trillion naira and 1.5 trillion naira respectively. In terms of ratios, its capital adequacy ratio remains strong, closing the year at 21.9%, while asset quality was sustained at IFRS 9 Stage 3. Loans improved to 4.2% in December 2023 from 5.2% in the same period of the prior year, that's 2022. However, the cost of risk was higher at 4.5% from 0.6% in December 2022 due to worsening macroeconomic factors. GTCO pre-tax return on equity stood at 50.6%, pre-tax return on assets 7.6%, and the cost-to-income ratio stood at 29.1%. Commenting on the results, the Group Chief Executive Officer of GTCO, Mr. Segun Agbaje, said that the challenging operating environment of 2023 truly tested the business model we put in place for the holding company for both our banking and non-banking business verticals. Harnessing the group's synergies yielded a strong performance, allowing us to strengthen our foothold in banking whilst also building viable and resilient businesses of Habari Pay, Guarantee Trust Fund Managers, and Guarantee Trust Pensions Managers. Also important to our success is our relentless obsession with innovation and offering great customer experiences, as demonstrated by the successful redesign and upgrade of our mobile banking platform application, GT World. Abaje maintained that GTCO has continued to strive to create value for its stakeholders in a landscape characterized by evolving regulatory reforms, global uncertainties, and heightened competition. We have continued to leverage our inherent strengths and capacities and capabilities to unlock significant value, creating more opportunities for businesses and individuals we serve. As we navigate the challenges and opportunities that lie ahead, we are confident that our robust underpinnings and focus on flawless executions will continue to drive sustainable growth across all operations and deliver long-term value for our shareholders, he enthused. The group will be paying a final dividend of 2.70 kobo, 2 naira 70 kobo, bringing the total dividend for 2023 to 3 naira 20 kobo. Good times are ahead for those who are banking with GT Bank and also have their shares. I mean, they are going to increase your profits very, very soon. Please remember me when you do that. FBN Holdings, also First Bank of Nigeria Holdings, also disclosed that it will be seeking shareholders' approval to raise 300 billion naira additional capital in a notice of its extraordinary general meeting filed with the Nigerian Exchange Limited on Monday. The financial holding company said that the meeting will be held virtually at the end of the month. So there is not going to be any fiscal meeting. It's going to be held virtually. That's the new word. You're welcome. According to the notice, shareholders would consider and vote on the special business that the company be and is hereby authorized to undertake a capital raise of up to 300 billion naira. Wow, so many zeros there. The capital raise transaction shall be by issuance of shares via a public offering, private placement, rights issue in the Nigerian or international capital market at prices to be determined by way of a book building process or any other valuation method or combination of methods in such tranches, series, or proportions at such periods or dates, coupon or interest rates within such maturity periods and upon such other terms and conditions may be determined by the board of directors, subject to obtaining the approvals of the relevant regulatory authorities. Is stated. This comes as Central Bank of Nigeria reviewed upward the capital base of commercial, merchants, and non-interest banks and promoters of new banks in the country. Citing both the domestic and global shocks, the Apex Bank, in a statement signed by its acting director, Corporate Communications, CD Ali, said that it had become necessary to raise the capital base of the banks. It then directed the commercial banks with international authorization to increase their capital base to 500 billion naira and national banks to 200 billion naira, while those with regional authorization are expected to achieve a 50 billion naira capital floor. And this is mandated on non-interest banks with national and regional authorizations to increase their capital to 20 billion naira and 10 billion naira respectively. In October, FBN Holdings PLC sought approval from the NGX to raise 139 billion naira in additional capital through a rights issue. Ahead of its 11th general meeting in July, the financial instruments have revealed plans and ways to raise capital by way of rights issue and future expansion projects. Before now, Access Holdings had indicated plans to raise $1.8 billion, and Wema Bank, which concluded a 40 billion naira rights issue, said that it would accelerate efforts to meet the new CBN requirements. Wow, there's a competition there. Don't forget, we are open for adverts, placements, bookings, and commercials. And you can connect with us and watch us on our ATN socials, Facebook and YouTube, Atlantic Television Network. Just search for that. And on Instagram and TikTok, we are on Atlantic TV Network 1. On X, formerly Twitter, we are on Atlantic TV Net. And watch us on our website, www.atlanticnetwork.tv. Now we'll bring you some news from the fatherland, Nigeria, concerning economy. Presidential candidate of the Labour Party in the 2023 elections, Peter Obi, says that the country needs to tackle the devastating effects of poverty and insecurity in the northern region of Nigeria through agriculture and industrial revolution. Obi said this when he paid a visit to the Emir of Zauzau in Kaduna State, Ambassador Nuhu Bamali, as part of his ongoing tour of the north. The LP chieftain lamented that the majority of the vast arable lands in the north are uncultivated, while most of the industries in the region have shut down due to lack of political will and inconsistent government economic policies. He also said that the current socio-economic instability in the country requires that all citizens and leaders come together and see how the situation could be salvaged. That's a good one coming from Peter Obi there. And moving on to Economic and Financial Crimes Commission is probing 50 banks and 50 bank accounts as it recovered 30 billion naira in the case of the suspended Minister of Humanitarian Affairs, Betta Edu, and the ongoing probe of the ministry over alleged money laundering. The document authorized by EFCC Chairman Ola Olukoyede said that the recovered 30 billion naira is now in the federal government's coffers. Wow. The EFCC also called for a united front in the fight against corruption while urging the judiciary and legislative arms to assist the Commission in its anti-corruption fight, and also appeal to their conscience because the negative impact of corruption is all over for all to see. Nice work, EFCC, on Better Edu and Co. Moving on, still on EFCC, Executive Chairman of the Economic and Financial Crimes Commission, Ola Olukoyede, has called on youths to shun cybercrime and other forms of criminality. Olukoyede said in a post on EFCC's official page, made this call in Benin City, Edo State, while speaking on a program, Youth Empowerment Against Cybercrime, organized by Cybersecurity Education Initiatives. The EFCC boss, who was represented by Williams Osegale, head of Public Affairs Department, Benin Zonal Command, warned the youths to stay away from cybercrime as the consequences were dreadful. He stated that there was no shortcut to wealth and urged the youths to use the internet to innovate and create positive economic growth. On matters concerning the judiciary, Federal High Court in Abuja has detained the Binance executive Tigran Gambayan in Kuje Correctional Center pending the determination of his bail application. The trial judge, Justice Emeka Nwite, who disclosed this after the order, after Gambayan pleaded not guilty to money laundering charges preferred against him by the EFCC. The judge subsequently adjourned the matter till April the 18th for the ruling on his bail application and May 2nd for the commencement of trial. I mean, where they are now, I mean, Bitcoin can't help anybody now. I mean, you have to serve your time if you're found guilty, man. Bitcoin can't help you out of Nigerian jails right now. Although your brother ran away, we're waiting for him to come back. No, going on, Central Bank of Nigeria has again declared the sales of dollars to Bureau de Change operators. CBN disclosed this in a circular uploaded to its website, saying that it is set to sell $10,000 to each Bureau de Change at 1,101 naira per dollar. Wow, that's good. And directed the operators to sell at a spread not more than 1.5% above the CBN rate. Similarly, the CBN has written to all banks in Nigeria to stop the use of foreign currencies as collateral for naira loans in a circular in its website. Apex Bank also said it has observed the use of FCY by the bank customers as collateral for naira loans and therefore prohibits it with immediate effect. On to other stories, total inflows into the foreign exchange market has rose about 42% last month to hit its highest level in the past 5 years as domestic and foreign investors continue to react positively to the nation's macroeconomic reforms. Data from the Nigerian Autonomous Foreign Exchange Market showed that the forex inflows have sustained double-digit growth. NAFEM data obtained from the FMDQ showed that inflows rose by 41.7%, which translates to moving from $2.64 billion in February to $3.75 billion last month, the highest level since March 2019. The upsurge was driven by significant increase from supplies, both domestic and foreign, while the rally was notably driven by non-government sources with less inflows from Central Bank of Nigeria. A breakdown showed that the domestic sources accounted for 59% of total transactions, while foreign sources contributed 41%. And the aviation industry has some news for us here. Right now, we're going into the Emirates Airlines as they have concluded plans to resume flights with Nigeria. This followed numerous visits from President Bola Tinubu to United Arab Emirates over the communication breakdown between both countries. The Minister of Aviation and Aerospace Development, Festus Keyamo, said that the Emirates Airlines has already indicated its readiness in a letter sent to the Nigerian government. Keyamo said that what transpired during the earlier visit and resolution was not fake, but was presented in a hasty manner. Apart from Emirates suspending flights to Nigeria in 2022, the UAE Immigration Department notified its trade partners and travel agencies that it was stopping visa applications from 22 countries, 20 of which are African nations. Wow, that's a lot. 20 of which are African nations. All right, more news from the central bank. They have given reprieve to importers with a further slash in the exchange rate for calculating custom duties at the nation's seaports by 1.1%. Information obtained from the official trade portal of the Nigerian Customs Service revealed that the Apex Bank slashed the customs FX duty rate from 1,260 naira per dollar to 1,246 naira per dollar on Monday, the April 8th. This equals to 1.1% reduction in the rate when compared to the old rate of 1,260.49 naira to the dollar used for the opening of Form M as of Friday, April 5th, and a decrease of 13.825 naira on the dollar needed to clear goods at the port. The slash in exchange rates for paying import duty is coming on the back of continuous appreciation of the naira in the foreign exchange market, with the naira trading at 1,251 naira per dollar at the Nigerian Autonomous Foreign Exchange Market, NAFEM, on April the 5th. What this means is that importers opening from M today, Monday, April 8th, for importation will have some measures of relief in terms of the money required to pay import duties compared to the importer who opened Form M on Friday, April the 5th. Using the Form M exchange rates to calculate import duties is in line with the Apex Bank's new directive that customs should be using the rates on the date of submitting Form M for calculating import duties. Meanwhile, there are expectations that the foreign exchange rate will witness further decline as the naira grows stronger, even as the Apex Bank plans to sell $15.88 million to 1,588 bureau de change operators. CBN also reviewed the exchange rate for BDC operators to 1,101 naira per dollar from 1,251 naira per dollar. Now let's go to some business news coming from the international scene. From the Wall Street shifted modest gains early Tuesday as markets remain focused on U.S. inflation reports later this week and what it could mean for interest rate cuts by the Federal Reserve. The futures for S&P 500 rose 0.2% before the opening bell, and futures for the Dow Jones Industrial Average rose about 0.1%. An update on the U.S. Consumer Price Index is due on Wednesday, the biggest potential market-moving news since Friday. Since Friday's job reports. Remember, on Friday, there are so many jobs, about 600,000 jobs for the United States economy. March's surprises strong employment data shows that workers' average hourly wages are behaving as expected, even though employers hired far more workers than expected last month. The upbeat sentiments stemming from Friday's job report, where indexes surged following the wage growth data, suggesting contained inflationary pressures that has set the stage for a white-knuckle event as forthcoming consumer price index release looms larger than life, said Stephen Innes, a managing partner at SPI Asset Management. A string of reports showing inflation and economy have remained hotter than expected and has led investors to delay forecasts for when relief on rates could arrive. Several economic indicators due this week could further influence expectations. Apart from Wednesday's report on the inflation that U.S. consumers are feeling at the cash registers, there will be reports on inflation at the wholesale level and expectations for future inflation among U.S. households. Federal Reserve Chair Jerome Powell said recently that he still expects cuts to interest rates this year. That's nice, but the central bank needs additional confirmation inflation and is heading towards the target of 2% from 3% that it is right now. The Feds have been holding its main interest rate at the highest level since 2001, hoping to grind down enough on the economy and prices for the investments to get inflation under control. The risk of holding rates too high for too long is that it could cause a recession, and they don't want that. Now let's go to equities trading. In equities trading, shares of Trump Media and Technological Group stabilized after tumbling down more than 8% on Monday. The company behind the Truth Social platform has seen its stock price swing sharply by the day, moving more on the hopes of Trump's fans on the profit prospects for the company, which said in regulatory filings this month that it lost more than $58 million last year. Wow. The shares have tumbled 44% over the past 2 weeks, and we are trading at 37.35 before the bell on Tuesday. Norfolk Southern dipped 2.1% before the bell after the railroad agreed to pay 600 million naira in a class action suit settlement related to a ferry rail derailment in February 2023 in eastern Ohio. The company said Tuesday that the agreement, if approved by the court, will resolve all class actions claims within a 20-mile radius from the derailment and personal injury claims within a 10-mile radius for those choosing to participate. This week brings the start of another earning reports on seasons. Delta Airlines, JP Morgan & Chase, and other banks with headline the earlier days of the reporting period. Analysts are expecting companies across the S&P 500 to deliver a third straight quarter of growth. Excellent news coming from the New York Stock Exchange. In Europe, at midday, Germany's DAX shed 0.6%. In Paris, the CAC 40 dropped 0.4%. And in London, the FTSE 100 edged 0.2% higher. In Asia trading, Japan's benchmark Nikkei 225 gained 1.1% and ended at 39,773.13 points. The Japanese yen languished as the US dollar edged up 151.91 yen, coming close to a 34-year high of the 151.97 yen, which it hit in late March. The Hang Seng of Hong Kong rose by a second day, adding 0.6% to 16,828.07, and the Shanghai Composite edged close to 0.1%. In South Korea, Kospi lost 0.5% to 2,705.16 points, and Australia's S&P/ASX 200 gained 0.5% to 7,824.20. Benchmark U.S. crude. We're going to crude oil markets now. Benchmark U.S. crude added 10%, 10 cents to $86.53 a barrel in electronic trading on the New York Mercantile Exchange. Brent crude, the international standard, was 20 cents higher to $90.58 per barrel. In currency trading, the dollar rose to 151.80 Japanese yen, and the euro cost $1,008 from $1,085. In U.S. stock indexes, there were a virtual standstill on Monday as trading claimed after a whirlwind of couple of days left them a bit shy of their records. The S&P 500 edged down less than 0.1% to 5,202.39. The Dow Jones Industrial Average tiptoed less than 0.1% lower than 38,892.08, while the Nasdaq Composite inched 5 points higher to 16,253.96. All right, my esteemed viewers, this is where we call it quits and wrap it up on this edition of ATN Business on Atlantic Television Network right here in the city of Port Harcourt. It was a nice time hanging out with you. I am Raymond Ken Mbata. We are open for business, for advert placements, and for bookings. Contact us and connect with us on our ATN socials, Facebook and YouTube, Atlantic Television Network, on Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, Atlantic TV Net, and also watch us live on our website, atlanticnetwork.tv. Peace and unity are the pathways to progress. Until I come over your screen, same time tomorrow, thank you for watching and see you next time.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on-spot news, live analysis, expert discussions on trending stories in politics, business, socio-economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN.